right, looks like we are live. Make sure we're here. Yes, I believe we are live. All right, welcome everybody. This is Crypto Picasso, DCX educator, co-creator for DCX Swipecoin. Before we start today, I want to say this live session will provide only interactive trading content and generic information related to strategies for trading. We do not offer access to online platforms for investment or online trading or to brokers. We do not provide personalized recommendations, advice, or an investment strategy or provide regulated financial services of any kind. I am not a licensed broker or a financial services advisor. If you require personalized advice, please consult a professional advisor that is licensed to provide investment advice and financial services where you reside. All right, this is for educational purposes only. Let's jump into it, guys, here. I apologize for the background noise. They're still doing construction here at my house. When they say 6 months, they really mean like 12. Reminds me of that old movie. I don't know if everybody's seen it, The Money Pit. Or just like redoing this house. Like, how much longer? 2 more weeks. Just keeps going. So let's give it a couple minutes here. Let people jump onto the session. Why don't you go ahead and put into the chat where you're tuning in from today. And we'll get into the charts in just a minute. Looks like we got Jersey, Massachusetts, Georgia, Bahamas, UK. I'm doing good. The ETH to BTC play for conversion, yeah, I still want to do that if we reach the high in that pair before the US dollar high in Bitcoin. But the way it's looking is that we may actually see Bitcoin put in a US dollar high, and then Ethereum, Bitcoin make that kind of a peak afterwards. Because the chart for Ethereum, Bitcoin doesn't look as strong as it used to. And Bitcoin is starting to gain its dominance and starting to really show support here above 55K. So definitely looking more for Bitcoin's move before Ethereum's move at this point. We'll have to see how that continues to play out over the next couple weeks. All right, what's up, fam? Let's see. We got... Oops. All right, Louisiana, Trinidad, New Zealand, South Carolina. Yeah, guys, I'm sorry. I did not have a chance to get an alert out saying that the session was going on today. I've actually been back-to-back calls all morning. Germany, South Carolina. Let's put the alert out right now. So we are live. All right, let's give it a couple minutes, let people jump on. All right, Poland, India didn't update. Yeah, the 2.272. I know what you're talking about there. Italy, Nashville, Mass. Yeah, North Carolina is a classic movie, right? Ireland, Croatia, Merlin, India, Poland, South Africa, Detroit, Colorado, North Carolina, Holland, Hollywood, Florida. What happened to BTC on Sunday? Queens, Dallas, Edmonton, Ohio, Beirut, London. I'm working the same trade idea, basically, waiting to see if we get the 4-hour open and close. We'll jump into the charts in a minute. Or for me, I'm looking for like 1 to 2 swings a week, working the same zone unless it fails. So the zone here had a chance to get about 400, 500 pips in profit. And now obviously stopped out of break even on this one. But if the zone holds, we'll continue to play the same setup. Turkey, Sweden, Ukraine, Chicago, Poland, Ireland, Nigeria. Malaysia, UK, Poland. Yeah, I would probably just ride out the wave in Ethereum at that point, because Ethereum is creating it a longer cycle over time. New York, Merlin, no invalidation just yet. Netherlands, Albania, Texas. Yeah. So guys, with the ideas, you guys have to realize that there's a certain level of, it's kind of like the disclaimer that I read in the beginning, right? There's a certain level of information that I can and I can't give. So obviously, it's a really good practice that if you get into a trade and it's up 400, 500, 600 pips, even 200 pips, to cover yourself. Number one thing in trading is risk management and capital preservation. So if you're in profit, if you don't plan on taking profit right away, then at least cover your entry so that if the price goes against you, there is no loss, right? So but like I said, it's becoming, I just can't, there's certain things that I can't advise you as what to do, basically. That's basically what it comes down to. I can give you education on what to do, but I can't advise you on what to do. It's like the disclaimer I read in the beginning. So there's a certain level of things that you need to always play with the same routine, right? If you're in profit, if you feel comfortable with it, take it. If you're not going to take it, at least secure it, right? So there's, keep that in mind going forward. North Carolina, Australia, Nigeria, Canada, South Carolina, Germany, Nashville, Sydney, Portugal, India, right, Miami. I think that we're going to hold this relative zone, yeah. Philly, Phoenix, Canada, Atlanta, Arizona, Swiss. Ryan from Philly, Chicago, Southern Oregon, what's good, Michigan, Colombia. XRP is really Nick's market. My main focus is Bitcoin. Bitcoin and the psychology of trading Bitcoin and swings for Bitcoin. So if you guys are completely new, right, to IM and the education and the platform, the academy, the strategies are really where you're going to find the most opportunities as far as trade ideas, because that's something that's monitoring the market 24 hours a day. Then we have our educators who are, have different markets that are their specialties, right? So I really focus on Bitcoin. We have Kurt and Mike that focus on some altcoins, Nick that focuses on XRP and Ethereum. So I really feel like with everybody, when you don't become overwhelmed with trading, when you're new to this, really find a market that works for you and stick with it, because otherwise you'll become overwhelmed. You'll look and you'll be like, even if you're going to trade crypto, there's at least 100 charts I could pull up today of opportunity, right? So once you learn the basic skills, find the charts that resonate with you, that work for you, and play those markets. For me, it's been Bitcoin. So that's why I really focus on Bitcoin the most. All right, Ukraine, Thailand, Vietnam, Canada, welcome. Pura Vida, Costa Rica, San Francisco, Argentina, St. Louis. All right, guys, we're going to jump into the charts here. We should have about 468 people on the call. Exactly, no one ever goes broke securing profits, guys. Securing profit would be to move your stop loss to break even or in profit. Well, if you're securing profit, you're moving it into profit. So wherever you entered the market, right, move it to that price, but then more into profit. Okay, that will be a different process depending on where you're trading. There's a lot of different places that you can trade Bitcoin these days with brokers, on platforms. Really depends on where you reside and what is, what's regulated in your area. Thailand, Canada, Germany, Albania, Vietnam, Brisbane. All right. Nebraska, Polska, Seattle. All right. Norway, Portugal, Spain. All right, guys, let's jump into the charts here. All right. I want to talk about some zones. Basically, where I feel like Bitcoin could continue here. First thing to remember is that to define the environment that I think that we're entering. Okay, so we want to start. Let's just kind of hide our target areas for a minute, and let's go to a higher time frame and just kind of lay out the environment. This is the biggest thing to really realize as a trader. Like, you want to know the tide. Like, the environment that you're trading is like the weather for the day. You really want to know how to act accordingly, or what kind of environment the rest of the market's emotions are going to be experiencing, because this is all just a game of emotion in the market. So we know that Bitcoin over time, in this perspective, it creates these emotional cycles, right? We know this. We've seen this over time. 2013, 2017, and now again in 2021. So there's a 4-year cycle that's at play with Bitcoin that has a lot to do with the mining reward and the mechanics of mining, right? The supply and demand of Bitcoin, as it has a price attached to it, as it's becoming adopted, and the network continues to grow. So as all this is playing out, Bitcoin makes these large strides in price, but it's really playing out this model, right? The 2013 peak of euphoria, 2017 peak of euphoria, and I feel like we're probably going to have a 2021 or early 2022 peak of euphoria if Bitcoin continues to perform the same way that it has over time. So if that's the case, we want to really understand what could happen here, because if Bitcoin, let's look in the logarithmic graph for a second. If Bitcoin's going to, let me go here to the liquid index, and let's just look on like a 3-day chart real quick. All right, if Bitcoin's going to come out of this zone and make a new high, it's going to go through that last little leg of price discovery in the model, which kind of puts Bitcoin at about, let's get rid of that, relatively the same spot now in the cycle as about right here in 2013, and kind of like right about here in 2017. Meaning that once Bitcoin clears certain levels and puts in support, that it usually does that last little stretch of the parabolic rise. All right, so we're looking for one of these little green zone here is to pop on Bitcoin and fulfill in the logarithmic perspective. Remember, we're looking at now, which would only be a move for me that I see up to about maybe like here. Now, obviously, that's quite high in price, but it would be in the flow of the way this thing is performed. Now, if you understand how Bitcoin does this every time, or at least what it's shown us, we see that after those peaks, the market usually puts in like an 83-85% retracement. The first one actually did about a 93% retracement. So if you look at Ethereum, its cycle, the last one it made, it's very much like running like Bitcoin did in 2017. So if we look here, and we kind of know that after it puts in the euphoria peaks, that it comes down about 85%, 83 to 85%. So let's kind of reverse engineer that a little bit based on the structure. Like, because think about it, when the market, after the market hits euphoria and it falls all the way back down to anger and depression, right? Once it falls down to these levels, what does it search for at those levels? It searches for support that, basically to build off of, and that's where it puts in the bottom of the bear market. Okay, so we can see here, like after it crosses out of here and it just goes through that last leg of price discovery, it comes back down and reestablishes those levels later when everybody loses, when the majority loses, basically. So to define our environment that we could potentially be in with Bitcoin, we want to know that if this thing goes crazy in the next 3 to 4 months, that it's most likely going to come back down and visit this same structure that it's creating support at right now. All right, so if we, reverse engineer that off of 85% decline back down to this area, it kind of puts us up in the, the same target zone that I have before, from all my Fibonacci logic, my market psychologic, everything. Like I've been looking at this target zone of around 330 to 350,000 for like 4 years. I've basically been looking at that zone. So we're coming up to the time period where if we're going to fill this gap, it may do it then, and we want to know what could come afterwards. Like not to get sucked into the the thrill and the euphoria. Okay, to understand that there's probably another side of the market cycle coming. So a lot of people have asked me recently that, do I think that Bitcoin has matured and they could go higher and, maybe not retrace like that? But what I've found over the years is that the statistic at the end of the cycle is what wins every time. The cycle of loss is really what wins every time. So I wouldn't expect anything to be different, honestly. It would make perfectly good sense if Bitcoin continued to run now to crazy astronomical numbers here, and then set everybody up for loss. Where, think about it, if this thing pops above 65 and then pops above 100, and everybody tries to just race in, this is when, if you Google search like news articles of people that went all in on Bitcoin, remortgaged their home and went all in on Bitcoin, all that, you'll see that that's when the news is like talking about people doing that at these points in time when the market is just, going crazy up. And so that's the time of maximum stupidity in the market, honestly. If you understand how all this works, you just want to try to avoid that as a trader and trade it accordingly. So if we see where Bitcoin is, the environment that it's in, and we understand that we're most likely we have a large potential here to expand in Bitcoin to that grand Fibonacci number, or even to this resistance on the logarithmic area right here, we have a chance to expand up into that zone. And if we do, how would that trade, right? We're looking at a 3-day chart here of parabolic expansion in a short period of time. So if that happens, then you really have to start looking at the market in lower time frames, like to try to squeeze into the market. Or you should start to expect the market to hold more of a bullish structure and not retrace as much, or not give you many good entries that you're looking for, where you almost have to chase it a little bit more to try to squeeze into the market. So that's the environment that we're heading into, because during these green times, where the market, that's a lot of expansion in such a short period of time, that in this time frame it's just stacking up. So we want to understand, if we're trying to trade that on the intraday level, or like for swings or anything like that, then there's a certain perspective we need to keep it in. All right, so let's look here on Bitstamp here, and let's go. Let me get auto logarithmic, and let's go back here to like the 4-hour. Well, we'll actually flip over to the chart I use for the analysis, because Bitstamp's the only exchange that has this wick right here. Someone basically dumped like, what was it, like 250 coins in 1 minute right there onto the market, and it flashed down to 51, but only on this exchange, and the market just recovered. So the fact that right here is this is a 1 minute chart. So this was one seller basically dumping out 212 coins, or at least 200 maybe coins right there, in 1 minute. So that is what caused this wick on Bitfinex. But if you look across the rest of the exchanges, they didn't go that low. They all held this level right here. Okay, so the fact that there was such a strong resistance to that, I mean, it was only 200 coins, but the strong resistance to that sell-off, we're getting to the point where there's not that many coins and the books are getting thin. So 200 coins getting dumped on market moved the price from basically 56 all the way down to 51. So it's like, wow, but this is the only exchange it happened on. So that's why I actually flipped over to another chart for the last analysis. So we'll go to that one, just to avoid that wick and that kind of sloppy structure there. All right, so now what we're looking at here, let's go down to the, I guess we can start on the 4-hour here. All right. Now, this is the reason that we play a zone, and when we're in profit, we cover our entry. Because if this is the 4-hour time frame, right? I'm going to put in here 56,200, which is basically right. 56,200, basically like right there. Right there. Okay. So this is 56,200. Now, if this another hour and a half goes by, and this candle closes below here, and the next one opens and also closes below this line right here, then I wouldn't be looking to work buys off of this level anymore, right? But I will give it one candle of opening and see if they can't open and then revert back above here to continue. So there's time that has to be given for the market to show its strength. Now, excuse me, nothing has changed in the analysis since a couple of days ago, except the market's just making up its mind what it wants to do with this zone, right? The first initial analysis to potentially, put buys in this area, the market moves, basically a good 500-600 pips, even 700 pips if you got the lower entry. But then now has come back down. So there's no reason there to excuse me, to expose yourself to risk when you're in profit, right? You have to really, capital preservation is number one. So if you're in profit and you feel comfortable with the profit, either take partial profit or at least secure the profit. Always, as a regular routine, it doesn't matter what you're trading. Okay? And realize that the market has to show itself at certain levels. So now what the market's really doing here, let's kind of flip it to a line chart. We're really trying to see if we can't continue to hold this level and really this little trend right here. So this is why I'm saying if this market comes down here and it closes below this level and then the next candle opens below the level but then pivots back up here and starts to close back above here again, it's the same, I'm working the same zone, trying to play the same level because now it's confirmed that level. So basically, when I first look at the idea, the level is holding and I'm working off of that level. And this is the level that is either going to make it or break it for me to say, yeah, it's still valid to work this level, or no, I'm not going to work the level anymore, right? So now we're in the zone where the idea, it gave profit, it gave time to either take partial or to cover your risk. But it's now down into the trying to prove itself at that level phase, right? Sometimes it'll just take off and run. Sometimes it'll come back and have to prove the level. Remember, we're looking at 4-hour time frames. So now the market has to prove itself at this level. Okay, if it proves itself at this level, then we continue with the same analysis that it's going to continue higher. If it continues to open and close below this level, basically, we can look at it almost like this, right about there. We want to see if we see this, then we're no longer trying to buy this area because it's breaking down. Then at that point, there'd probably be a better buy entry on a deeper retracement. But the market is so strong on the higher time frames that we may not get that lower retracement. So we have to, take what the market gives us. Right now, I would love to get an entry back down around 48 or something like that. But if it doesn't want to give it to me, if it wants to hold in this level and then revert back up and keep building right here, then you got to squeeze in where you can get in, basically. And, as the market becomes more aggressive, we may find that same situation over and over again over the next couple months because, yeah, we want a deeper retrace, but the market's just not going there. It keeps pumping and pumping and pumping. So we got to try to squeeze in where we can fit in. Okay, so this is the level, basically, I'd say about 56,200, right about there. All right, we want to make sure that the next, let's say, we have an hour and a half, we will open up another 4-hour candle. If the next daily candle, which is what comes after that, right, because after this 4-hour candle that comes at 2 o'clock my time, the next one will be at 6 o'clock my time, which is when the new daily candle comes. So look at it like this. If the daily opens below 56,200, it's probably going to retrace lower, right? Because that would be giving it a candle between now and then to figure itself out, right? This candle is most likely going to close below, because it doesn't look like it would have to leave a strong wick and, get strong buying power in the next hour and a half. It's probably not going to happen. But the next candle could easily close back above 56,200. And the next candle, when it closes, will be the opening of a new day. So if the new day opens above 56,200, it may be a strong buy in this zone still. Because really what's happening is we're trying to turn previous little resistance here now into support and hold some sort of just like a little consolidation trend in here. So we'll see like more structure like this as the market becomes more aggressive, where it doesn't give you the pullback you want and it just consolidates like that. So that's why we're trying to squeeze into this zone here unless that zone fails. And if that zone fails, then that's the breaker point. We lose any kind of trend that we are already building right there on the the open and close price. See this 4-hour close. That means that this could even come down to here, pivot, and then come back up here, and it would still be good. The buyers would still be in control, right? So we would have to see this level being let go and turn into resistance, and this trend getting closed below. And that would be the indication that, yeah, we're probably not going to hold strength here. We're probably going to do more something like this, and then look for another entry down here, right? Like I said, you got to sometimes take what the market gives you, because here's the thing though, if I wait for this entry down here, it's either maybe not going to come, or it might come like 4 days from now. And then everybody's like, man, like where are these ideas at? Right? Because there's either got to get in where you can squeeze in, or you got to wait longer for the really juicy entry, right? This is like trying to squeeze in the market here. Okay, it's run in 300, 400, 500 pips in profit, secure it. If it comes back down, try it again. If it wants to hold it, take what the market gives you. But if it breaks certain levels, then we're looking for lower entries. But it hasn't broken those levels just yet. So we got to see what the market wants to do here still. All right. But we want to keep in mind what we would be looking for in this situation. Because look, the reason I have, like I said, I would like to get a deeper entry. Maybe, let's say somewhere down here, like testing these bottoms over here, these little tops, like somewhere in this zone, right? 47 to 48, like that would be really nice place for the buyers to step in again. But that would mean that this move right here that is in it, coming down about, let's say 61%, that would mean that this move that we're in here, right here, is exhausted. If it retraces that deep now, that would mean that this move that we're in here, that I just highlighted, is exhausted. And understanding the way that wave structure works, this wave that we're in here, it should, whether it's going to create some sort of 1, 2, 3, 4, 5, or whether it's going to create some sort of A, B, C, either way, this wave that's running up right now, it really has a large probability that it's going to be at least the length of this wave. So stopping short right here, it may not do the deeper retrace that we want, because it's trying to be at least equal to, if not bigger, than the previous wave. Okay, like, because everything kind of comes in balance in market geometry. Like, so even if this thing wants to only give an A, B, C, that should be the equalization, like the equilibrium. Or if it wants to give an A, B, or I'm sorry, 1, 2, 3, 4, 5, then it could give that structure as well. The thing is that we're kind of like mid-wave in a potentially longer wave. So we could expect some sort of, let's say like this, look, if we want to copy the way the market performed right about here. Where the market gives us something like just about like that. Max, like maybe down to this level 54, but we don't get the deeper retrace. And maybe we lose this zone and we got to jump back in somewhere around here, around the 50 EMA. if it doesn't hold the 56,200 zone, right? But that's what this is what the point I'm trying to make here is this type of bullish continuation and not the deeper retrace that everybody would like to get, right? So this is even now putting that on there. That's if it breaks 56,200, that would be the first place really to start maybe looking for the buyers to step in, is right here. Right here at that breakdown level, right there, and that 50 EMA. Because we've seen how the market's made that similar structure over here before and didn't do what? And didn't retrace deeper at that point and then continue, right? It held, went higher, and then did a deeper retrace. So I feel like we're probably in the same kind of situation where we're about mid-wave, and this is maybe about as good as it gets in the retrace before it continues higher. Now, the targets that I said are good, potential targets, are based off of where this wave has come from. So remember two things about the structure, right? In the trending market, we have a bottom, right? And then we have this wave that broke out, and it made a high here. Now, this is still a lower high than here, but this is a potential reversal wave because now this has come down, put in a higher low right here in relationship to here. Now this expansion has taken out this high, so it could be trying to reach to take out these highs over here. All right. So just understanding trend and like the impulse and retrace like structure and geometry that gets printed in the market over and over again, we can see that there's a really high probability that this market may want to stretch to take out these highs. And at the same time, be in that, specification where it's coming at equal or maybe longer length than the previous wave. And then we have to see, like after it gets up to these levels, it may do something like this, give another wave where it could turn into 1, 2, 3, 4, 5, or it may retrace further and have to take some more time to get out of here. You have to play it one step at a time. But given the environment that we're in, where we're starting to stack up like 3-day and weekly candles, and be very bullish, I would think that if this makes a new high up here, like up into these zones, that it's probably going to be a smaller pullback to these levels and then a continuation higher. All right, so let's talk about where we would look for, trading targets on the intraday based upon what the chart has already shown us here. All right, so let me delete some things here and show you some concepts here, right? So now let's talk about this wave, right? We already know that I said that it should be, or there's a high probability, right, that this wave could be equal or longer than this one. So we know that this thing could extend further. There's a potential it could extend further and try to at least tag this high or take it out. Okay? So in knowing that that potential is there, we want to look at this wave right here and its bottom and its top that it made, because off of those 2 points, not only does that give us, right, when we use our Fibonacci, not only does that give us like our retracement levels, like this one would be closer to a 50%. All right, retracement. See how this went from this bottom point to this top point and then put in support at this 50% level, which is also these previous tops, right? So and this previous top over here. So there's a lot of geometry there and Fibonacci there and support saying that this level right here was a 50% retracement zone, was putting in support at previous resistance, and the buyers stepped in there to push another wave higher. Okay? So if you're following me so far, then look at this. We use that Fibonacci tool, right, to identify this 50% retracement zone. But we can also use the Fibonacci tool and go from the top backwards and then just put in our extensions above 1, right? Now, I do not use this other tool, trend-based fib extensions, and I'll show you why. Look, I can use the Fibonacci tool if I go from here and go backwards, and if I have those inputs in there of the extensions, I can do that with 2 clicks. Basically, I can take my Fibonacci tool here, the regular fib, and I can go right here, boom, to there. I got my extensions. As long as I have those inputs in. And you can save your different templates, right? You can make new ones. right? So put your extension levels in there and save a template, and then just use your Fibonacci tool backwards and put your extension in there. Or you can use this other tool that they created for you that takes more time, where you go like this from the bottom to the top and then back down again. Why? I don't see the purpose in that, right? So I don't know. Maybe there's some other reason that I haven't known about all these years of why people would do it with 3 clicks when you can do it with 2. But basically, that's why I don't use the trend-based fib extension, because I'm literally doing in less time what it takes me to do quicker in the same tool. Okay, so that's how you get extensions if you just know how to work these tools. So we're looking for what? Extensions in price. So if the market goes from here to here, and now we're looking for extensions above this 1 point. Some good Fibonacci numbers would be here, about 59, 150 zone, which is what? Previous resistance right here. Look at that. Next one, about this 1.618 level right around here. Okay, this could potentially be where the market wants to put in a new high. Okay, up into these levels. Okay, so if this wave is going to, excuse me, if this wave is going to extend equal to or higher than the previous one, then that may be up into these levels that we're heading up towards that 67 zone or whatever. And if it really wants to get running to this 2.272, this thing could run to 80, 82, just off of this impulsive move. So just understanding, you know, the structure that the market has shown us so far and where this could extend to and how it's keeping in balance, right? Like, I don't feel like when we look at it this way, right? And we look at this, and we go back to our regular fibs, right? Let's put 61.38 and we put 50 in there. When we look at it this way and we look at how this held this, you know, basically 1, 2, 3, almost a triple bottom right there on that 50%, which was also this resistance here, all that. So when you look at the market like this and we identify this resistance that has now turned into support over here, what are the chances of Bitcoin dropping below 41,100 again? Pretty slim at this point. Like it should not retrace that low, and if it does, excuse me, then something's a little bit off. Maybe, you know, like the network's not so healthy, or there's more selling. Like something would be changing, right? It would be a cause for not looking for the bullish narrative for continuation, right? Like, so we work level to level. Like right now, like this is really my level. Like Bitcoin, I really feel like Bitcoin should never, ever go below these levels over here again, like 29, 30. Bitcoin should never get that low again if it continues to perform with the same model that it has. Now we've kind of gone up another notch where I really feel like Bitcoin probably is not going to go below 41 ever again now. Now, if we continue to get parabolic, most likely, and we go to like some astronomical numbers, most likely all of this foundation that we're putting in like around this zone, right around here, like about 55 or so, if we kind of kick it up to like a weekly level, we can kind of really see the significance of those levels, right? Like, especially in the weekly line chart. Like right in here, like this was like where the market came up, kind of like just dipped above it a little bit, found support there temporarily, and then just completely lost it at those levels. So if the market expands for, you know, from now until the end of the year and then experiences a bear market, the bear market will most likely come back down and find support at these weekly levels that have been established here and are getting, you know, flipped now over the next couple weeks. Okay, so market will always fall back down to a level of support, and we can see that over and over again. So that's why I said if we kind of reverse engineer the chart a little bit, and we know that in the bear market this thing's probably going to do an 80 to 82% retracement, 83% retracement, then what's a good zone for it to come back to? Right around this same zone. I think that if this thing runs up to like 250, 350,000 and then like goes through the bear market and we start hitting like denial, panic, anger, and depression, I feel like those levels of dipping down here in that last little of depression would maybe be like a crack of 50,000 into like the high 40s again, and then it would be like a gift at that point in time. But everybody that experienced the majority that experienced the cycle of loss, it'd be like, ugh, to them. It'd be like, ugh, get me out of this. I bought this Bitcoin, at the end of the year last year, and it went crazy in price, and now I'm just trying to get my money out. I need to just get completely out of this market, right? So to the majority, it won't seem like a gift at that point in time. It'll seem like the last hope of even getting their money out of the market, right? But then remember, the trading, you got to think 7 steps ahead of the market, even, against the majority. So the support levels that we put in here, back in May, April and May, and then we're putting in now, we're kind of slicing through them now. Those should most likely turn into the bottoms of the coming bear market. And don't think that this thing's just going to run forever. If it goes crazy high in price, it's most likely going to put in a bear market. And that's when we start, let's go to the liquid index for that. That's when we really start looking at this thing to continue to make lower highs. Okay, because as we've seen, remember, I talked about in the last session, and I won't get too deep into it now, but this all revolves around the mining reward schedule. There's about 940 days from now that the mining reward gets cut in half again. So we're talking about 2024, just about May, sometime in May 2024. So right here in time, the mining reward is going to get cut in half again. So for you guys that don't understand what that means that when you study this is the mechanics that runs everything. This is what kind of disrupts the supply and the demand. It makes it profitable for Bitcoin, and people want to partake in it, or the miners want to partake in it and support the network, or they don't. So that's really what pushes it. So at this point in time, the reward for the miners will get cut in half again. It's a pre-known date and time. It has to be profitable at this point in time for people to mine it, electricity-wise, cost of operation-wise, everything. Because their amount that they get as the reward will get cut in half. So either their cost of production will double if the price does not go up from that point. So we know historically the market puts in a large parabolic rise and a bear market bottom before that point in time. Okay? So this market of Bitcoin, this should do something like this, or it has the potential to do something like this. Let's say, like this here, between now and then, where the market puts in a crazy astronomical high and then bleeds back down to these support levels that we just talked about. Okay, all before, and then starts to ramp up again in anticipation of this date. So between now and May 2024, this market should put in a peak of euphoria and a low of anger and depression, if it's going to continue to move along in its model. I would say that's really likely, honestly, unless Bitcoin, because you think about it like this: Bitcoin is limited supply and it serves such a disruptive utility. So this thing, for it to die, right, it would have to become unprofitable for the miners. So if it becomes unprofitable for the miners, or if it didn't, let's just put it this way, if it didn't have a price tag attached to it, it would probably just keep coming adopted, and just go up higher, faster. But since there's that emotion of the market that's kind of mixed in with the adoption of Bitcoin, it runs through these cycles. So it makes more sense for this thing to kind of run up to crazy prices that trap people and make people become the statistic of the loss, right? And then come back down into that anger and depression where everybody just wants completely out. But having this knowledge sets you up at that point in time where if you, like I said, if that thing comes all the way up to here and comes back down to 50, 55, it's going to be a gift at that point in time. But it won't seem like a gift to the majority because the majority are losing, because the majority chase price. So it makes more sense for Bitcoin to continue in this model rather than either A, completely fail and go the opposite way and not progress but degress, or start to do something and go over $1 million too soon. Like, I don't feel like that would happen. I feel like there's a certain emotional state of the market that keeps Bitcoin tame, and that kind of keeps Bitcoin in line from just going crazy. I do feel like Bitcoin has the potential to hit $1 million one day, but not on this cycle. I feel like it has the potential to run very high, trap people, and then come back down to these very prices where sometime in 2023 it'll seem like a gift, and we would play that accordingly. So if that happens, just know that we would be entering, if we're potentially entering one of these green zones, then what comes after those green zones? At least a good year plus of lower highs in the market. Over here, all of this, right? That was like 450 days, like, at least. So look at this. I mean, it's almost like the top gets put in, and then 430 days later, 420 was this one over here. About 427. I mean, there's a science to this, right? So the point being is that these zones, we could be heading into euphoria, and then all of 2022 is one of these red zones, like literally, where we come into here, and we're in a red zone somewhere for maybe like 420 days or so. So back up to about there, right? And then, like I said, the market, here's where the mining reward gets cut in half. So the market has shown us that if it's going to enter that green zone, it has to put in a high and a low before that date. So if it's going to run like 2013, it could be something like that. If it's going to run like 2017, it could be something like that. But either way, both of those scenarios show that this other side of the market is coming. And it's going to come at the time when it traps the most amount of people, because there's so many people that have been sitting on the sidelines and have nothing to do with Bitcoin and haven't invested nothing in Bitcoin. When Bitcoin breaks its previous all-time high in this area, right? We're so close now, like 57. We're like 55, 56. We're so close now to breaking that previous all-time high. That's when it actually goes through the price discovery and people just pile in. And that's when we enter what I call everybody is a genius season, because everybody just buys and the price goes up, and everybody's just like, man, this trading thing is so easy. It's so easy. Buying big. I'm an expert at Bitcoin. I bought here, and look, it just keeps going up. I'm going to tell all my friends. I'm going to start my own business. They're like, I'm going to go all in on Bitcoin. It's the same story every time. So you want to be able to recognize that emotion here and realize that is probably what's setting everybody up for the bleeding back down in 2022. All right, and we have seen that since this runs on a 4-year schedule with the mining rewards, that it's usually those odd years in December where we're putting in the peaks. Here, 2013, 2017, here in 2021. Back that up to right about there. I guess that needs to be a little closer to there. And that needs to be closer to there. All right, and then the even years after those peaks are usually like 2014 was a bear market. 2018 was a bear market. So I think 2022 has a very high probability of being a bear market, where the majority of people that chased in to, because remember, all of these that I'm showing here, when we look at them in the financial market perspective, all of these are just emotional market cycles. All of them are all this over and over again. So if we are about to blast into that, how'd this get on there? No. If we're about to go into that higher price discovery mode, okay, then you can be sure that we're probably going to head into that point where it's setting up for the loss for the majority. Okay, for anybody who chases Bitcoin beyond its previous all-time high, if they don't take profit relatively soon, if they fall into the emotion of, I'm just going to keep buying more, we're all going to be rich, it's time to get, full on invested, and don't recognize the signs of complacency and just expect that next wave to $1 million, they're most likely going to lose. They're setting themselves up for loss. Okay, so it's really, really important to to understand the environment that we're maybe heading into here. It could be just like this, the end of the year, last quarter of those odd years for Bitcoin. It goes through that phase of adoption, sets everybody up for loss, and then that even year comes in again, and then we basically have this over here, the mining reward. All right, so before the mining reward in 2024, this thing should put in a peak and a bottom of a bear market. And I do think that bear market low will be probably testing 50,000, where people are just trying to get out with 50,000 of Bitcoin. Just get me out. Which means mostly everybody that's been invested this whole time, I kind of look at it like this. I've been in Bitcoin a long time. So I realized that there's a really good chance that whatever I have in value right now is probably the lowest acceptable value that I'll have in the future. You know what I mean? So whatever Bitcoin's price is right now today, even if it comes back down after the bear market, it comes back down to these same prices. My value of what I have in Bitcoin will probably be about the same now. So even if I don't take profit, I'll probably still have the same amount of value in the market as I do at this point in time, because there's a probability that prices won't go below this structure of support that's building now in the bear market. Okay, that's just a kind of like think about the bigger picture for people that plan on holding Bitcoin, into the 2030s or whatever, So like even if kind of look at it like this, it would be like in 2017. After it broke 3,000 right about here, and it ran up to 19,000, when it came back down to 3,000, it held that value, right? Those were the lows. Same thing here in 2013. Basically, once it broke past, it made a new all-time high there. Basically, breaking past like $175, it ran up to $1,175. And then what? Came back down to about $150, $165 right there. In that same zone. Okay, so whatever value before the pump, whatever value was there, like the people that got in before the pump, they still had the same value afterwards, even if they missed their opportunity to take profit, which is the crazy thing about Bitcoin, because when you look at this, and this is what institutions are starting to realize, that even though Bitcoin goes on these crazy swings, like thousands of percent up and then 90 or 85% down, on average over the last decade, on average, it still has gone up 200% a year on average. So it's kind of interesting, like even through its wildest swings, there's an average of gains over all that time. So people like MicroStrategy and like the bigger players and are starting to realize this. And that's why they're, taking a big position in Bitcoin now, like holding on their balance sheets, because they're betting on Bitcoin to remain deflationary like this, while it's becoming very evident that fiat currencies have been inflated, and that inflation is taking its toll as well. So Bitcoin is kind of like a hedge against that inflation, and even though it goes through these crazy swings in price, it still goes up on average 200% every year. So people have realized that, and realized that it's kind of like this: anybody who got in here below 50, they'll probably be okay even at the bottom of the bear market for long-term holders. Obviously there's maximum opportunity to take profit and buy back, but not everybody does that. Not everybody's a trader. Like more people are like holding this on their books for a long period of time, or like have retirement plans or whatever, or investing in Bitcoin for the long term. But it's kind of interesting how it works like that. Like once it goes into parabolic mode, usually the people who got in pre-parabolic mode are still okay after after all the crash and stuff like that. So if history repeats itself here, I would say mostly everybody who's in under 50 will probably be okay in the bear market. And then we're looking at the same exact kind of a wave forming to come after the mining reward in 2024. So I would expect the same thing in Bitcoin, like to put in these bear market lows, and then buying reward is over here. We're starting to ramp up in anticipation of that, and then we make another large market cycle. Maybe we crack into the 7 figures then. Who knows? But I don't think that Bitcoin's ready to do that much. I feel like it's more like if it does any kind of parabolic growth in the next couple months, it's probably going to keep doing what it's been doing and leaning towards loss for the majority who chase it, right? So that's why really on these sessions lately, I want to really like lay it down hard. Like if we are entering into anything like optimism, belief, thrill, and euphoria, check yourself. Like really check your emotions. Like even this is the important thing too. Even the chats and the environment that you're in, social media, whatever. Remember, 70% of people are losing. So don't go with the majority of the sentiment of what you feel in your chats, in your crowds, in your social media. Is like, because when we hit crazy prices, that's when people do stupid things. So you want to realize that stupidity is going to come, and you can almost bet on it. You know what I mean? You can almost bet that stupidity is going to come. So if we're going to enter that aggressive, part of the market right there, then it's most likely that we're going to continue to stack up some 4-hour candles here, get minimum pullbacks, and just have to get in where we can squeeze in and look for the market to continue to do what? Turn resistance into support. Okay, this would be the last zone here of resistance, right up in here. Now it's either trying to turn that into support. So, like I said, with the hourly, the 4-hour little trend that's forming there, and that 56,200 zone right about there. We want to see if the market wants to just come down here, test this little resistance area, get back up here and continue to be strong. And then that's where we play the same analysis again. Or if the market wants to break down here and give a deeper retracement. But like I showed you, history is showing us that this wave should, or at least has the potential to be strong. And if that's the case, we could be looking at maybe something like this happening. Let me scrunch it down a little bit more for the structure that we have here. Maybe something like that, maybe. And then we tap these certain levels up in here, maybe take out these highs, and then do a deeper retracement here. So this is kind of like mid-wave. This is where you just gotta let the market confirm its levels, and if the levels still hold, you work off them again. If they don't, you look for a deeper retrace. But the biggest thing to remember here is like, don't overdo it, right? Just because the market looks weak there, it doesn't mean like, I don't think this is an environment to really look for sells. If you're looking for sells, scalp them quick, because we're looking for the large expansion. There will be time to sell Bitcoin once it rolls over, because that will be the trend of the bear market. The bear market trend isn't upon us just yet. So looking for sells in here is kind of like suicidal in a sense. Like you're just going to probably have to take profit quick or just get stopped right back out. So the flow of the market is to the upside. If it keeps confirming support, you keep working off the support. And if it breaks certain levels, you look for deeper retraces and you look for continuation of trend. Because why? The trend and the flow and the tide is moving up until a certain point. Until we hit that maximum just euphoria, thrill, and just stupidity, the market should continue up. And I'll just seal it up with this, that should show some sort of relevance on the 2-week time frame with another RSI test up into these zones. So it's kind of look like this, like all of this right here. Anything above basically 90 is really strong on the 2-week time frame. So you see here in 2013, we tested that area twice. Because in 2013, we had 2 waves that led to we had this wave, and then the retrace, and then the other wave that went higher. In 2017, it was just like a steady flow. There wasn't 2 waves. So that's why we only tested this 2-week RSI once with this high. This cycle has been a lot like 2013, where we've already put in like a wave high, retraced, and now we're looking to make another high. So I'll be looking for the same thing here. Like this was the first test of RSI 2 week up in that zone. And then if this one kind of creeps up here between now and, you know, mid-January at the latest, then that's another sign that the market's getting too exhausted up in there, and it might be time to start looking for that euphoric state in the market. All right, so I'm gonna go ahead and seal it up there, guys. I really appreciate you guys jumping on my sessions. Hopefully you got some nuggets. Leave me some feedback, leave me some comments, and yeah, guys, we'll keep updating and letting you guys know what comes next. Basically, I have it marked out here, and I'll save this up. I'm basically looking for this zone on the lower time frames to hold, but that's 56,200 to confirm our swing entry, which is more like up here, right about there. Okay, so kind of look at it like this, putting all these perspectives together. This line right here, we want to see the daily open back above this line, right? So this is like, if the market reverts and comes back and gets strong above this line on the daily, then on the because that would be the 4-hour opening and closing back above this level, then we try to work it again for the continuation higher, right? But on lower time frames, if it's going to confirm that level where it might find support for like an alternate entry, right? Now this would be like an entry here on the lower time frames in this zone based upon, you know, this previous resistance, previous resistance, previous resistance. May even pull it down here, catch this little previous resistance here, this one here, this one here. So this zone right here, this may be a good entry zone here where the buyers are going to step in and try to hold this level on lower time frames and flip it back up to here. Once it confirms up above here on the higher time frames, then it looks good for continuation, right? So understanding how that all pieces together, we may see some potential entries, opportunities come in this zone right here for the buyers to step in and then eventually defend this level, right? Because this is really where they're trying to hold it right here. So let's leave it with this nugget. This is really, really, really what needs to pivot and hold on the 15-minute time frame. Okay, the market needs to come down in here and pivot and then push and close the day back above here and then continue. All right, so we may have some, whoops, that tool got stuck. So we may have some good buy opportunities pop up in here. All right, so I'm going to leave that actual markup on this. I don't know what's going on with my mouse here, guys. And I'm looking for the same thing, higher low into this. It's not so much a retracement zone. Switched it up and call it a support zone. All right, and let me flip back over to the candles. See what I did there, right? The trend is really on the line chart. All right, sometimes I do the perspective. This actually makes more sense to do the perspective right here in the line chart. So we'll just leave it right there. Looking for a higher low in here. Price to pivot off of these levels. Right about here. And then we'll save that right there. All right. And then I'll try to mark up for Ethereum too in the next couple minutes here. But I want to go ahead and seal up the session because I know we have some other educators coming on. So guys, thank you for your time. This is the lower time frame. I really feel like it needs to hold right here. And then if we flip back above that 56,200, then the swing is still valid. All right. Many blessings. We'll see you on the next.